Hey everyone, and welcome. Today we're diving into the exciting world of emerging markets. Think of countries on a fast track, growing rapidly, embracing innovation, and offering incredible investment potential. These aren't just abstract concepts, we're talking about tangible opportunities to be part of something big. Imagine tapping into economies experiencing unprecedented growth, where consumer demand is soaring and industries are being revolutionized. But it's not just about the numbers. Investing in emerging markets is about connecting with the aspirations of millions, witnessing firsthand the rise of new middle classes, and contributing to global economic progress. So buckle up as we explore this dynamic landscape, uncovering the factors that make emerging markets so compelling and the strategies that can help you navigate this exciting investment frontier. Emerging markets are like a diverse tapestry, each region boasting its own unique strengths and opportunities. From the technological prowess of Asia, to the resource richness of Africa, and the burgeoning consumer markets of Latin America, the potential is vast and varied. We'll delve into specific countries, examining their economic landscapes, political climates, and regulatory environments. Our goal is to equip you with the knowledge to identify those markets that align with your investment goals and risk appetite. Remember, knowledge is power, and in the world of emerging markets, informed decisions are the key to unlocking extraordinary returns. So stay tuned as we embark on this journey of discovery, uncovering the hidden gems and navigating the complexities of investing in these dynamic economies. Join us as we separate hype from reality, providing you with a balanced perspective on the risks and rewards that lie ahead. Let's kick off our exploration in Asia, a continent synonymous with technological innovation and economic dynamism. Countries like China and India, often dubbed the Asian giants, have witnessed meteoric economic growth, transforming from developing nations to global powerhouses. One key driver of this success has been their embrace of technology. From e-commerce giants like Alibaba and Tencent, to mobile payment systems like Alipay and Paitem, Asia is at the forefront of the digital revolution. This technological advancement presents immense opportunities for investors seeking exposure to sectors like fintech, artificial intelligence, and renewable energy. But Asia's appeal isn't limited to its giants. Emerging economies like Vietnam, Indonesia, and the Philippines are also experiencing rapid growth, driven by factors like favorable demographics, rising middle classes, and increasing urbanization. These countries offer investors diversification and the potential to tap into nascent markets with significant growth potential. As with any investment, understanding the specific dynamics of each country is crucial. Factors like political stability, regulatory environments, and infrastructure development can influence investment decisions. So, let's delve deeper into some of these Asian markets, uncovering the unique opportunities and challenges they present. Our next stop takes us to Latin America, a region brimming with vibrant cultures, abundant natural resources, and a rapidly growing consumer base. While often overlooked, Latin America offers a compelling investment case, particularly for those seeking exposure to consumer-driven industries. With a population exceeding 650 million people, Latin America boasts a young and increasingly affluent demographic. This growing middle class has fueled a surge in consumer spending, making sectors like retail, e-commerce, and entertainment particularly attractive for investors. Moreover, Latin America is home to a wealth of natural resources, including oil, copper, and agricultural products, which are in high demand globally. This abundance of resources provides a solid foundation for economic growth and presents opportunities for investors interested in commodities and related industries. However, it's essential to acknowledge the political and economic complexities that exist within the region. Some countries have experienced volatility and uncertainty, while others have made significant strides in strengthening their institutions and attracting foreign investment. Therefore, a nuanced understanding of each country's specific circumstances is crucial for making informed investment decisions. Now, let's venture into Africa, a continent often dubbed the last frontier for investors. While Africa has faced historical challenges, It's essential to recognize the continent's immense untapped potential and the transformative growth story unfolding across many of its nations. Africa boasts a young and rapidly growing population, abundant natural resources, and increasing technological adoption. These factors have created a fertile ground for innovation and entrepreneurship, particularly in sectors like mobile technology, renewable energy, and financial services. Investors are increasingly recognizing the opportunities presented by Africa's burgeoning consumer markets, growing middle class, and improving infrastructure. Countries like Nigeria, Kenya, and South Africa are at the forefront of this growth, attracting significant foreign investment in recent years. However, investing in Africa comes with its own set of considerations. Political stability, corruption, and inadequate infrastructure remain challenges in some parts of the continent. Therefore, thorough due diligence and a long-term investment horizon are crucial for navigating the complexities and maximizing returns. As we've journeyed through these diverse regions, it's become evident that emerging markets offer a tapestry of opportunities. But alongside the potential rewards come inherent risks and challenges, particularly when it comes to navigating the regulatory landscape. Unlike developed markets with well-established legal frameworks, emerging markets often have evolving regulations that can be complex and subject to change. This dynamic environment requires investors to stay informed, adapt quickly, and seek expert guidance to ensure compliance and mitigate potential risks. Transparency and corporate governance standards can also vary significantly across emerging markets. Investors should prioritize companies with strong ethical practices, sound financial management, and a commitment to sustainability to minimize exposure to governance-related risks. Navigating the regulatory landscape is an ongoing process, requiring constant monitoring and adaptation. Partnering with local experts, conducting thorough due diligence, and staying informed about regulatory changes are crucial steps for investors seeking to succeed in these dynamic markets. While emerging markets hold immense promise, it's crucial to acknowledge the inherent risks they present. One significant factor to consider is currency fluctuation. Emerging market currencies can be more volatile than their developed counterparts, influenced by factors like global commodity prices, political events, and interest rate differentials. Imagine investing in a company that's performing well, but then seeing your returns dwindle due to a sudden depreciation of the local currency. This volatility can erode profits and impact overall investment performance. However, this volatility also presents opportunities for savvy investors. Understanding the drivers of currency movements and employing hedging strategies can mitigate risks and even enhance returns. It's all about balancing risk and reward. By acknowledging the potential for currency fluctuations and implementing appropriate risk management techniques, investors can navigate this aspect of emerging market investing effectively. Another crucial aspect to consider is political risk. Emerging markets can experience periods of political instability, regulatory changes, or geopolitical tensions that can impact investment returns. These risks can range from policy shifts affecting specific industries to broader macroeconomic instability. For instance, a sudden change in government regulations could impact a company's profitability, while social unrest could disrupt supply chains and affect business operations. Understanding the political landscape and assessing the potential for such events is paramount. Investors can mitigate political risk by diversifying across different countries and sectors, engaging in thorough due diligence, and staying informed about political developments in their target markets. Remember, knowledge is power. By understanding the political dynamics and potential risks, investors can make more informed decisions and navigate the complexities of emerging markets with greater confidence. While emerging markets are rapidly developing, infrastructure gaps can pose challenges for businesses and investors alike. Inadequate transportation networks, unreliable power supply, or limited access to technology can hinder growth and impact investment returns. For example, a manufacturing company might face higher transportation costs and logistical hurdles due to poor road infrastructure, while a technology firm might struggle with limited internet connectivity in certain regions. However, these infrastructure gaps also create opportunities for investors. As governments invest in infrastructure development, it can lead to significant economic growth and attractive investment prospects in sectors like construction, energy, and telecommunications. By identifying countries actively addressing their infrastructure needs, investors can potentially capitalize on these long-term growth opportunities. It's about spotting the potential where others see only challenges. Finally, as responsible investors, we can't overlook the social and environmental considerations within emerging markets. Rapid industrialization can sometimes come at the cost of environmental degradation, labor exploitation, or social inequality. It's crucial to assess these factors and prioritize investments in companies committed to sustainable and ethical practices. Look for businesses that prioritize environmental stewardship, fair labor standards, and community engagement. By aligning our investments with our values, we can contribute to positive social and environmental change while seeking financial returns. It's about recognizing that sustainable investing isn't just ethically sound, it's also financially prudent in the long run. Remember, investing in emerging markets is not just about chasing returns, it's about engaging with the world in a responsible and informed way. By considering these social and environmental factors, we can contribute to a more sustainable and equitable future for all. Let's dive into some inspiring success stories from emerging markets, starting with Africa. For years, traditional banking remained out of reach for millions across the continent. But a quiet revolution has been taking place, driven by the power of mobile technology. Companies like M-Pesa in Kenya recognized the untapped potential and built a mobile banking platform that has transformed lives. Suddenly, people could send and receive money, access microloans, and even pay for goods and services with just a few taps on their phones. This innovation didn't just bridge a financial gap, it empowered individuals, fostered entrepreneurship, and demonstrated the power of technology to drive inclusive growth. Investors who recognized this trend early on witnessed impressive returns while contributing to meaningful change. This story highlights a key lesson. Look beyond the traditional indicators and seek out the innovators, the disruptors, the ones solving real problems. That's where the true potential of emerging markets lies. Our next stop takes us to Latin America, a region renowned for its agricultural prowess. But beyond the raw materials lies a world of opportunity in value addition and global supply chains. Take, for instance, the story of a coffee cooperative in Colombia. Instead of simply exporting raw coffee beans, they invested in processing and packaging facilities, creating their own brand and marketing directly to international buyers. This shift from commodity producer to global supplier not only boosted their profits but also created jobs, empowered local communities, and enhanced the country's overall economic competitiveness. Investors who recognized the potential of such value-added businesses found themselves at the forefront of a sustainable and profitable trend. The lesson here is clear. Look beyond the obvious and explore the full value chain. Emerging markets are brimming with businesses seeking to move up the ladder, and those who support their journey can reap significant rewards. Asia, with its burgeoning middle-class and tech-savvy population, presents a fertile ground for e-commerce. Entrepreneurs across the region are capitalizing on this trend, creating online marketplaces that connect buyers and sellers, offering everything from electronics to fashion to groceries. Consider the story of an entrepreneur in Indonesia who identified a gap in the market for affordable fashion. Leveraging the power of social media and online platforms, they built a thriving business connecting local artisans with fashion-conscious consumers. This story underscores the power of digital platforms to democratize entrepreneurship, empower small businesses, and drive economic growth in emerging markets. Investors who recognize this potential early on have witnessed impressive returns, riding the wave of the e-commerce boom. The key takeaway? Pay attention to the digital landscape. Emerging markets are witnessing a surge in online businesses, and those who can identify the winners early on stand to gain significantly. Often, the most compelling investment opportunities in emerging markets lie beyond the headlines, in sectors and businesses that don't always grab the spotlight. It could be a healthcare provider leveraging telemedicine to reach remote areas, an education technology company making learning more accessible, or a renewable energy startup bringing clean power to underserved communities. These ventures might not be on everyone's radar, but they hold immense potential to generate both financial and social returns. The key is to stay curious, to look beyond the obvious, and to delve deeper into the specific needs and challenges of each market. By identifying businesses addressing these needs in innovative and sustainable ways, investors can uncover hidden gems and position themselves for long-term success. Remember, emerging markets are constantly evolving, presenting new opportunities for those willing to venture beyond the familiar. It's a journey of discovery, and the rewards go beyond just financial gains. They lie in being part of a transformative growth story that's shaping the future of our world. As we conclude our exploration of investing in emerging markets, one thing is abundantly clear: the future is bright. These dynamic economies are brimming with potential, driven by youthful populations, rapid technological advancement, and a hunger for progress. While challenges and risks exist, as they do with any investment, the opportunities presented by emerging markets are simply too compelling to ignore. We've seen how innovation is transforming lives, how entrepreneurship is fueling growth, and how investors are playing a crucial role in shaping a more prosperous and inclusive future. Remember those bustling streets we saw earlier? The farmers tending to their crops, the entrepreneurs launching their dreams? These are the faces of emerging markets, and their stories are filled with hope, resilience, and an unwavering belief in a brighter tomorrow. It's this spirit of progress, this drive to succeed, that makes investing in emerging markets not just a financial decision, but a deeply human one. It's about connecting with the aspirations of millions and being part of a global movement towards a more equitable and prosperous world. Now you might be thinking, this all sounds incredible, but where do I even begin? And that's a valid question. Investing in emerging markets requires careful consideration, thorough research, and a willingness to embrace a long-term perspective. Start by defining your investment goals, risk tolerance, and time horizon. Then, delve deeper into specific regions and sectors that align with your interests and investment thesis. Remember, diversification is key. Don't put all your eggs in one basket. Spread your investments across different countries and industries to mitigate risk. Seek out reputable financial advisors with expertise in emerging markets. They can provide valuable insights, guide you through the complexities, and help you build a portfolio that aligns with your financial aspirations. Investing in emerging markets is not a get-rich-quick scheme. It's a journey that requires patience, discipline, and a belief in the power of long-term growth. There will be ups and downs along the way, periods of volatility and uncertainty, but by staying informed, adapting to change, and staying true to your investment strategy, you can navigate these challenges and reap the rewards of participating in these dynamic economies. Embrace the volatility, see it not as a threat, but as an opportunity. In the words of a wise investor, the best time to invest is when there's blood in the streets. While this might sound dramatic, it highlights the fact that periods of market downturn often present the most compelling buying opportunities for those with a long-term perspective. Remember, fortunes are made not by following the herd, but by charting your own course, by daring to invest in the potential you see, even when others might not. Emerging markets offer precisely that, the chance to be part of something big, something transformative, something that has the power to shape the future of our world.